The story will be about how AI-powered investing took trillions of dollars of assets from passive funds and from active funds, because I think that fundamentally using AI is the future.
Welcome to AI Factor, coming to you from the NASDAQ market site. Today we're talking with Doug Clinton, CEO of Intelligent Alpha, about how AI is changing investing. Welcome, Doug.
Great to be here, thank you.
Some 61% of US adults own stock, according to a recent Gallup poll. When it comes to giving people investment advice and strategy, how do you see AI as changing the playing field?
I think AI will change the playing field in probably numerous ways. And the fun thing about AI is that whatever we think is going to happen today, sitting here right now, Rocio, we're probably going to be drastically wrong. But I think the big thing that AI brings to investing that we don't have right now with humans, with passive indexes, is this unemotional intelligence that is AI's superpower. And so at Intelligent Alpha, we've been experimenting with using these modern large language models for over a year now to build investment portfolios, and we've just launched our first fund on the NASDAQ. And what we've seen in terms of why AI seems to perform well, at least in our estimation from our tests, is that it doesn't get hung up when the market's going down. It doesn't get nervous. Or when the market is booming, it doesn't feel like it's missing out and doesn't get FOMO. And so I think the really key thing about AI and what it brings into the market that is new and unique is just that unemotional intelligence.
From the investor side, I think there's some anxieties about AI and maybe anxieties about some of that unemotional intelligence that you're talking about. What would you say to people to kind of soothe those concerns?
There are a lot of different ways that people can use and will use AI, I think, to invest in the future. The way that we do it and how we kind of address this concern with investors is that we still do have a human oversight layer. So for us, AI, our AI investment committee, we call it, which is using 3 different large language models, we still have the portfolios that those AIs create reviewed ultimately by humans. So a human will say, okay, does this strategy, does the portfolio that the AI put together, does it make sense in terms of what we're trying to create for our investors? And does it violate potentially any regulatory issues for funds that we might manage? All those things are still seen, at least at the human level. And I think in a lot of cases with AI, we probably still will have some level of human oversight just to make sure that there's no mistakes. The thing where I think people get really scared with AI is when they think about AI sort of being unsupervised and just free to trade as it might. We get that question a lot with our portfolios. And there are some other investors that will probably try to use that approach, and maybe they'll find ways to do it with comfort in the future. But I think really that human plus AI element, having that oversight layer, will be how a lot of things get done, at least for the next decade.
That makes sense. I think that's about the stage that we're at right now. Do you see in the future ever getting rid of that human layer?
I think over time, as we learn to trust the system more and understand maybe how it thinks a little bit better, I think you could see the human layer probably pull back some, reduce some. I don't know that we'd ever want to necessarily fully eliminate it, because it does seem like such a useful step, right? If you're trying to create some sort of a high frequency strategy where speed is of the essence, I think that's a very specific use case where the human layer would be, detrimental, essentially, because it would pull away your speed advantage. So I do think there will be cases where things that orient more towards speed, you'll want to eliminate the human layer. But things that, as what we do in terms of the portfolios we build, where they're meant to be longer term oriented investment portfolios, I think having that human layer will probably survive for a while, even if it does get reduced.
And so how is the way that you're deploying AI at Intelligent Alpha different from how other strategists or investment firms are using AI today?
We think about AI as a tale of sort of 2 worlds, and the world split in fall of 2022, and that's when ChatGPT was launched. And I think where you can kind of categorize that separation is prior to ChatGPT and this large language model revolution that we're living in right now, it was really a world built on machine learning. And so it was predicated on having access to lots of data to try to find sort of signal in a lot of different noise. And I would call that kind of the old way of investing with AI or machine intelligence. The new way, so post 2022, and this is what we're really trying to pioneer at Intelligent Alpha, is using these modern large language AI models. And what's different about those models compared to the old machine learning world is the machine learning world, it just understands quantitative realities. It just understands numbers. And so if you put numbers from Apple and advanced auto parts into those models, they have no idea that one sells phones and one sells auto parts. But in the new world, these new models that we use, they actually do qualitatively understand companies. They know the difference between Apple and advanced auto parts, and they can factor that into their decision making. I think that makes these new models in this new era much more exciting in terms of the results we could see from the investment process.
How do you see your company moving forward with AI as it continues to develop? And also, how do you see companies moving forward that might not embrace AI so wholly?
I think that, again, we're going to see a tale of two kinds of companies in the future. There will be AI native companies like ourselves. We're building from the ground up to embrace AI. And then I think there will be traditional companies who have to figure out how do we incorporate AI into potentially a massive existing business. And what's interesting between the AI native world versus the traditional world is the AI native world doesn't have to worry about the politics of, hey, we created some really efficient new process. Now we can lay off a bunch of human workers. I think in the traditional world, that's going to make it really hard for some of these companies to actually see some of the productivity gains and some of ultimately the profitability gains that they could see, because they're probably going to be hesitant and slow to remove jobs that could be replaced by AI. So I think over the next decade, we're going to see a lot of these AI native companies come out and try to reinvent how certain industries are built. I think they'll then force some of the traditional companies to play harder, play faster, to adopt it, even if they are hesitant, to your point, and I'm sure some will be. I think those AI native companies will just show, in terms of their margins, in terms of how fast they can grow, that those companies have to get on board with AI.
And then how do those AI native companies ensure their longevity past this AI craze that we're seeing right now?
The only way to create a moat in technology is constant innovation. And Elon Musk, he has this quote about moats are sort of lame. And I think he's right. I mean, if you're building a technology company, if you're doing something new and it's interesting and you're creating profitable product, you're creating something that customers want, competition will come. That's the nature of the markets. And the only way to stay ahead is to keep your pace of innovation high. And one mantra we've always sort of lived by is that for Intelligent Alpha, we're the first company to build our firm entirely using these large language models to do our investment process. And I think by nature that puts us in the lead because we're first, but that also means we have to keep moving faster than everybody else. If we can do that, if we can keep moving faster than all the competition that will come, by nature we will stay in first, but it's going to take a lot of work.
What are some of the biggest ways that you see AI changing investment in the years to come? What do you think some of the biggest advancements are going to be, and potentially some of the biggest pitfalls?
I think from the biggest picture, if you think about kind of the history of asset management and how investing has changed over the past 20 or 30 years, the biggest innovation, the biggest evolution has been the move to passive investing from active investing. And so you think about like Vanguard, and you think about ETFs and being able to just invest in the S&P 500 for a very low cost. I mean, that has taken trillions of dollars in assets away from traditionally active funds, the old Fidelities of the world, how people used to do things. And I think if we fast forward another 2 decades from now, the story will be about how AI-powered investing took trillions of dollars of assets from passive funds and from active funds, because I think that fundamentally using AI is the future. And the reason is because I think using artificial intelligence, we talked about having no emotion being a superpower. What it does is it adds some intelligence to indexes, which are just definitionally sort of a set of rules that can't be smart. And they also take that emotion out of the active side, where human beings are still making decisions, but we get caught up, we make mistakes, and sometimes those compound. And so I think by fixing those two issues, AI has the potential to really capture a lot of value in terms of assets flowing to these new AI-powered funds.
Great, thank you so much. This was a really interesting and informative conversation. Thanks for watching. I'm Rocio Faber with Quartz. Stick with QZ.com for more.